Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Seattle Investors Club podcast, where we talk about the nuts and bolts of real estate investing. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how are you doing today?
I am doing excellent, Joe. I could tell, though, you were trying to come up with a new adjective, right? Were you trying to come up with a new adjective to describe me other than lovely or talented? Or I think I'm going to give you some money, and I'm going to come up with some adjectives to describe it. Make you sound really cool and wonderful.
I was going to use the fantastic Julie Clark today, and then I thought, though, since we've been using them lately, I would give people a week off so that maybe it comes back larger or, a bigger reaction next week. I don't know. What do you think?
You know what? I think I'll leave it to you. You're the marketing guy, right?
I try.
There you go. You're doing pretty good, I must say.
Man, oh man.
Speaking of doing good, I like to work on my transitions, guys. That's I can never quite get it right. But speaking of looking good, Joe Bauer, where are you at out in the woods somewhere looking good?
Holy smokes.
With your abs. If you guys want to see what Joe looks like with his shirt off, everybody, check out The Fantastic Life. It's good stuff.
That's how I bring in the followers, Julie. Don't let them know.
Oh, well, hey, that's, I'm going to say it's probably working for you. So good move on that. Good move. So where are you at?
Oh, man. I am in Grand, I believe it's pronounced Marias, Minnesota, which is right on Lake Superior. And get this, tomorrow at 9 a.m., I'm going to be taking my first float plane.
Oh.
Yeah, first float plane out to the national park called Isle Royal.
When you say taking your first float plane, I imagine you're just riding along, not doing some weird flight lesson, right?
Nope, that would be my brother's business there. He would be the one that likes to fly planes. So
cool. Well, awesome. So is that the only way into this place was by plane?
So you can take a boat, but because we're kind of on the swing season here, the boats don't run as often. And the boats actually take 3.5 hours to get you out there, so I'm told. And the plane only takes about a half hour. So it wasn't that much of a price difference, and we decided to go with the plane.
That sounds awesome. I don't know why I feel like when I'm thinking about you taking these crazy adventures, I think about insurance, life insurance, actually, but we're not even going to talk about life insurance today.
I should look into that, huh?
We could, but yeah.
A little extra life insurance the float planes.
That's right. Any exciting animals or encounters or weird people or anything exciting happening outside of lifting weights and flying around?
I wish. We were driving down a road yesterday, and you know how usually in Washington or whatnot, it might say, deer crossing the next few miles or whatnot. We saw one that said moose crossing, and I was hoping that we'd see a big old moose.
You and the moose.
Yeah, but we
That's
didn't.
Your thing.
Didn't see it. So.
Maybe you're like, maybe you have like some scent that moose like. We don't call them meese. We call them moose, I guess. Whatever we call them.
The mooses.
The mooses?
I don't know.
Awesome. Well, you know what? My transition earlier was better.
It was.
I'm kind of falling short here on how to transition. I got transactions on the brain because you know what? It is, what is it? September 20th. And our team, good old SIC, we got 2 off-market deals yesterday.
Whoa.
Bam, bam. That's right. Beautiful stuff right there. So we'll have to post about that here once we make sure we're closed. I don't like to brag until we close. But, yeah, it was a good day. And I'd say that I'm working 7 a.m. to 7 p.m., pretty much every day. Massive appointments. It is insane right now, guys. I don't know about all you guys, but the floodgates have opened for us. And the volume of calls and appointments and conversions and willing sellers off market is totally different. It is on, baby. Let's do it. Yeah, I'm excited. So can't wait to circle up with all our peeps at our monthly SIC meeting and see how everybody's doing. Or at some of our other groups, some of our other friends' groups, like WARE is a good one, or Fixated on Real Estate, our friend Tarl. You guys should be hitting all those up. And, of course, Seattle Investors Club. Come join us, second Saturday of every month. It's good stuff. We got to keep in touch, stick together. Speaking of sticking together, that was my transition. Let's talk about insurance.
Yeah, let's do it.
Our boy Nick here. I can call him that because Nick and I have met virtually for the first time today. And what's awesome is the first thing he said to me is, "What's up, girl?" And so I know that Nick is going to be one of my bros. That's how I know, because he's cool and laid back and he knows a lot about insurance. So let's go find out what we can school ourselves on today with our boy Nick. Welcome.
Yeah.
Thank you, Julie. Thank you, Joe. Doing well. Appreciate the two of you having me. Look forward to this.
Awesome sauce. So the one thing I did not ask you when we were offline here, Nick, is it looks like you're a homegrown boy, a Washington, born and raised. Is that accurate?
That's correct. Born and raised in the West Seattle area that Joe has actually spent some time at. And I met a East Side girl from Bellevue, and she moved me over to the Bellevue area. But born and raised in Washington State.
Well, I have one other question before we can continue. It's kind of a make or break question. See how it goes today, which is Cougs or Huskies, Nick?
I tend to bark, if that gives you any inclination.
Okay. All right. Well,
so
sorry, Nick.
Does that end everything?
Nick. Little short and sweet today, guys. No.
But I didn't attend the school, if that helps any. I'm just one of those obnoxious fans.
Excellent. Well, you know what? That I will forgive then.
Okay.
That I will forgive. More so because we think you're a cool dude. So let's get into it. Joe, hit him up.
Okay.
Let's get started.
Yeah. So, Nick, what we like to do to kick this off is just get to know you a little bit better. And we believe that the story of how you came to where you are is really interesting. So if you could share with us, as much as you want to about your past and how it got you to being in the insurance game today.
Yeah. Well, good question. Happy to address that. So it was, 15 years ago, and I was in college working in hotels. Really enjoyed working in hotels. It's just basically working with people and facilitating a need that they had. And but at the same time, I was applying for various law enforcement positions, local police departments. So I really wanted to get into the police department, into law enforcement back in my 20s. And, that's a long process. If you keep passing each stage, you're several months into the process. And I would keep advancing to each and every stage. And then at the end, they'd say, we're not able to offer you the job and we can't tell you why. And so 9 months into it, your heart is broken and you kind of start all over again. So it just got to the point where I need to make a different career decision. And it was a Sunday paper, back in the day, 15 years ago. That's where you got a lot of your information, the Sunday newspaper. And there was an ad in the paper and it said Farmers Insurance, career night, come hear what we have to say. And it was something about insurance always interested me. I think maybe more so on the claim side of it, because similar to law enforcement, you're kind of investigating and coming out, to determine a conclusion and that sort of thing. So something about insurance piqued my interest. Never thought I'd get into the sales component of it, but sure enough, I'm on the sales side of it. I've had my own agency with Farmers Insurance for the past 15 years, and I love it. I love everything about it. I love being self-employed first and foremost. I love the product. I think it's a very important, product that we offer our clients. And, I've mentioned sales a couple times, but really not once in my 15 years have I ever felt like I've sold anyone anything. I just have some wonderful, wonderful referral sources out there, real estate agents, lenders, peers of yours, investors that tend to refer me. So they kind of sell me, and so it's kind of nice where I don't necessarily need to sell myself. So over the years, I've never felt like I've had to sell anything, even though I'm in sales. But that's kind of how I've gotten into this industry. I love what I do, and hope to do it another 20 years.
That was a good story. Do you ever dress up as a cop for Halloween when you go to Halloween parties just to feel like?
No, I don't do that. I still kind of follow, current events and all the,
all the craziness in the world.
All the craziness in the world, and the true crime shows on TV, and things like that. And I do have a few clients that are in law enforcement, and anyway, kind of live vicariously through those avenues. But never dressed up as a police officer, and my wife's never requested that of me either. So, but life is still young, and maybe that day will come.
Nice.
Awesome. So what do you like most about the insurance biz? Is it just the people part and the investigative? It has kind of I get you on the investigator part thing. I think about real estate. For me, the part that I love is I always thought I just love the research or the deal analysis, the number crunching and all that stuff. I'm like a deal junkie in that way, but I have grown over the years. It didn't take that long either. I absolutely love the people part now. I mean, I was just like a numbers head cranker, and now I enjoy the people. I love going into people's houses because I know I can help them. It doesn't even matter what the situation is. I know I'm going to help them. And it's just fun because I'm relaxed,
I think very similar in my industry as well, Julie. A lot of parallels there. As I mentioned, my roots kind of come from the hotel industry, and that's customer service. Assisting someone that has a need, and hospitality, and that can transition over to many different industries, including insurance. So yes, I enjoy assisting people. Working with people, especially when it comes to kind of the vacant home market with the flippers, especially new ones. I mean, I'll work, I've got clients across the board. I've got clients that have an inventory of whatever, 20, 30 going at a time. And then all of a sudden, 10 minutes later, I'm getting a call from someone, and it's their very first one, and educating them on how the insurance works, because it's a very niche insurance product for vacant homes and investors that flip. And so the education part of it. And then at the end of the day, they're thanking me, for educating them and providing them the product and making it easy on them. And I'm like, no, thank you. They're like, no, thank you. And it just is wonderful back and forth, banter of gratitude. And so yes, I would agree that the people component of it, and just assisting others and those clients that appreciate it, makes your job
awesome. You don't mind,
wonderful.
You don't mind training people, even the newbies and stuff like that. Some people who probably have a level of success get tired of working with, answering the basic 101 questions. So it's refreshing to talk to somebody that is 100% on board with helping some of our new investors, who we all want to hold their hand and help them. I guess what I want to do with you real quick is just cover, because we do have experienced investors listening. We have, semi-experienced, and we definitely have new people, everything across the board here. We might even have people, we are starting to get a lot of out-of-state people listening. So shout out to you from Joe and I. If you guys are listening out of state or out of the Pacific Northwest, we really appreciate you guys. We love you guys. And all this information that we share on the nuts and bolts of real estate investing can apply anywhere, really. So thank you again. But let's talk about the different types of policies real quick. Let's do a little basic 101 investor thing. I like to break investors down between like flippers, developers, like doing new construction, and maybe landlords who are doing buy and holds. And maybe I might even ask you an Airbnb question. I've actually got a few questions on my list today that came from some of our own Seattle Investors Club members. I said, hey, we're talking to an insurance guru type, someone that has all the info today. What do you guys got? And then shout out to our friend Jan's group over at WARI, who some of those people in Jan's Facebook group, which is awesome. If you guys haven't been on it, over at WARI, Washington Real Estate Investing, jump on that. Piped in with a few questions too. So this is for all of us today. So can you tell us, what does a flip policy look like? And is that different than what a new construction development type policy, vacant policy looks like versus a buy and hold? What are the differences?
Yes. Yeah. Good question. And that's, I'd say, most important is make sure it's insured correctly, because anyone can provide you, insurance in a legal document that says you have insurance. Just because you have insurance does not mean a claim is going to be paid or honored. Those are completely different things, two different things there. You can't just say, well, I have insurance, so this should be, the claim should be paid. Well, no, the claim will likely not be paid if it's insured incorrectly. What I mean by that is, let's say someone is flipping a property and it's mainly cosmetic. And they go into the house and they paint, new kitchen, new countertops, new flooring, etc. But for the most part, it's mainly cosmetic. That's typically, as I would call it, a vacant home policy. And we use a company called Foremost Insurance. Again, I have an agency with Farmers Insurance. Farmers owns Foremost Insurance, and they specialize in vacant home insurance for, again, just this kind of cosmetic rehab. Number one. Number two, if someone's looking to buy said property and then add 2 stories, that's a different type of policy. That's more of like a course of construction builder's risk type policy. Thirdly, there's one where they have a vacant plot of land and they're going to build a brand new house. That's another different type of product. And again, that's a builder's risk policy, but that's a new construction policy. And then there's the more traditional holds, the rentals, virtually any company can insure those out there. Those are a little more straightforward. But again, it's a house in good condition. There's a tenant in there. They're living there under a lease. So again, it's just important to make sure it's insured correctly, meaning how that home is being used. Is it vacant? Is it a brand new construction, etc.? And that's where you do put a lot of trust in your insurance professional. And as investors, you have all sorts of professionals in your circle. You have the real estate agent, the lender, the handyman, the contractors, et cetera, et cetera. So kind of in your tool belt, you need to have, an insurance professional as well. So you do put a lot of trust in them. But with me and my clients, it's, certainly some Q&A there at the beginning. Okay, tell me about this house. Tell me how it's going to be occupied or not occupied over the next several months, and what you're doing to the property. And then we fit in, the best product for their situation.
One of our members, that's awesome. So let me recap. Is that if I got this correctly? So we have maybe a vacant home policy for flips, just a standard that. We have a course of construction, which is also a builder's risk policy for doing like additions and things like that. And we have a new construction builder's risk policy for straight up development, new construction land deals. And then we have landlord policies for buy and holds and rentals. Is that sum it up?
Exactly.
And then you said Farmers owns Foremost.
Correct.
Okay. Cool. We did have a question on Foremost. Let me see if somebody was asking me, why do vacant insurance policies for flips vary from $800 to $3,000 on the same house? Does that make sense?
Yeah, it does. Again, not if they're quoting the same product. So again, I think they're getting the 800 is perhaps it being a rental, or again, it's being insured incorrectly. The most expensive of those four types of policies that you just outlined there, Julie, is the vacant home that's just going under cosmetic rehab. Those are the most expensive. The least expensive, well, I guess it's debatable what's the least expensive. I'll just leave it at that. The vacant under rehab is the most expensive of those types of policies. So again,
do they get priced off of, like, what's the basis of calculating? Is it a purchase price? Is it a replacement cost price? What is it?
Yeah, again, that's going to depend the type of product. Like the vacant home product, our pricing is typically about 1% of the coverage amount. So if you have a house, again, we don't insure the land. The land's not going anywhere. That's something very important for investors to realize, is the land's not going anywhere. It's not going to burn down, etc. So if the land's worth $1 million and the house on the land is worth $300,000, well, we'd insure it for $300,000. In the pricing for the flip property insurance, the vacant home insurance, is a set amount based on the coverage amount, and it's 1% of the coverage amount. So if you have $300,000 home that you're looking to insure, that price is likely going to be $3,000 per year to insure that $300,000 home. Again, about 1% of the coverage amount.
Are you insuring so they purchase it for $300, it's worth, $550 or something when they get done. What's the insurance, the $300 or the $550, 1% times?
Good. Yeah, great question. So kind of the math equation that we use for the vacants is we'll go to the county record. The county record will have two numbers there, the value of the land and the current value of the structure. Again, as I just mentioned, we don't care about the land. Land's not going anywhere. It's not going to burn down. We can't rebuild the land, etc. So we don't look at that number. We look at the assessed value of the structure. And if that says, let's just say it says 200,000, then I'll ask my client, how much in rehab are you looking to put into this home? They may say like 50,000. So then we take the 200, we add the 50, and I'll say, hey, does 250,000 sound like a good number? And they may say, yeah, it makes logical sense. Let's do the 250. They may say, well, you know what? I can sell it for 500, once I'm done with it, and my loan was for 400. Why are we doing the 250? I said, well, the county record here has the land at 200,000, and we're not insuring the land. Oh, okay, makes perfect sense now, Nick. Appreciate you explaining that to me. Yes, let's move forward with 250,000 in coverage.
Well, actually, let me ask you a question. You just made me think back to my, dorking out in my own brain here. Shouldn't you, or does it make any sense to make sure you have insurance to cover your lender? Does your lender require it to be insured? Is there any tie to loan amount?
Good. You're asking some great questions, Julie. So my clients work with various hard money lenders. Now there's one or two that the majority work with, but I come across several different hard money lenders, and it's different, and it's frustrating for me, and it's got to be frustrating for the clients too. Some could truly care less as far as the coverage amount. Now they don't want to see a policy for whatever 20,000 in coverage for a house that's worth $500,000. So they want to see a reasonable number on the insurance proof of insurance I provide. But there's some lenders that want to make sure the full loan amount is insured.
Well, isn't that in the best interest for the investor yourself anyways? I mean, shit.
Well, number one, it's illegal for me and insurance companies to overinsure. And just because we're insuring it at that amount doesn't necessarily we would pay that exact amount. But let me give you a scenario, Julie, specific to our region here in the Seattle area. If you have the same exact house, okay, and let's just make it easy. It's 1,000 square foot home, 2-bedroom, 1 bath. That same exact house is in Medina on the shores of Lake Washington. You take that same house, move it over to White Center, an area that has a soft place in the heart of Joe and I. We both have spent some time living in that area, but it's not going to sell for nearly the same amount. Again, it's the same exact home. The land value, you're going to add an extra zero being in Medina, but it's the same exact house. Once again, same exact house.
Right.
So in theory, the insurance that we provide, even though one house is worth $2 million, the other's worth $300,000, it should be the same exact coverage amount on that house because it's the same year built, the same square footage, et cetera, et cetera. Again, getting back to the thought of we don't insure the land's not going anywhere. So again, we're not going to, if that house burns down, we're going to pay out the value of that house, not that expensive land in Medina on Lake Washington, whatever the case may be.
Hey guys, Joe here. I just want to take this super quick break from the action to let you know something that we have really cool to offer you guys. As you know, marketing is the lifeblood of our real estate business, and Julie and I spend a ton of money sending out postcards and letters to people all around the Seattle area. We've partnered up with YellowLetters.com to get you guys 10% off all of your marketing needs at Yellow Letters. All you have to do is go to YellowLetters.com, and when you check out, use the code Seattle Investors Club, and you'll get 10% off any of your marketing needs at YellowLetters.com. You can send postcards, letters, whatever it may be that YellowLetters.com has, so that you can keep your marketing engine running for a little less money. So go to YellowLetters.com, use the code Seattle Investors Club with no spaces, and get your marketing going today. All right, let's get back to the action.
Do you think that investors should be asking their hard money lenders? I'm sure, most people are so anxious to get their deal done. And maybe, I'm going to say this, guys, but I'm also going to say it with a grain of salt because I like to call out investors for being cheap asses, right? And stepping over pennies and spending hours to save $100 or even $1,000. I mean, the name of the game is that's time is money, right? So if one lender requires something and the other requires something else, and the difference in price is, $500 or I don't know what the difference in price would be versus having your loan amount being required to be insured versus not, which is kind of what we're talking about, right? I mean, I don't know. Is there a huge difference? Do you see if you had two houses, the same house, not in Medina, two houses the same in White Center, and one lender required loan amount and one lender didn't, one did it the way that you would do it, based on the value of the improvements or whatever, right?
Yeah.
Let's say there's a $250,000 difference. I mean, isn't the cost minimal?
In the grand scheme of things, yes. In the grand scheme of things, your line item, as far as I would imagine, you're the investor, not I, but the cost of rehab, the cost of the loan, the interest on the loan, on and on and on. I would imagine insurance is going to be a very small number compared to all those other major expenses. So yes, no, I agree with you. And I've got clients all across the board. They want to err on the side of caution, even though I share, hey, you know, we could potentially insure it at this amount. Doesn't necessarily mean we're going to be able to pay out this amount, et cetera. And then I have others that are extremely frugal, and they want to, you know, I want to do
it's, you know, for those people,
250,000 in coverage. Yeah.
The frugal people, it's a game. It's fun for them. I don't really, it's almost like a wine collector, you know, or people or whatever they collect. I find, because I deal with a lot of investors and a lot of just retail regular clients, because I'm just a traditional broker as well as an investor and investor's broker and all that, that I find that the people that are penny pinchers, they do it because it's kind of like just their personality. It's fun for them. It's like a game. They might convince themselves they're doing it about the money, but really it is that they just enjoy that challenge, you know?
Yeah.
So
can I share a real quick story that's going to resonate with all your listeners on that topic? Real quick. It's a new client of mine, and we're trying to determine, you know, coverage amount for her home, and she kind of erred on the side of caution and did the higher amount, even though it was whatever, $40, $50 more per month. And she says, Nick, you know what my mentor shared with me that really resonated with me? He told me, if you worry about pennies, you're going to make pennies. If you worry about millions, you're going to make millions.
Love it.
And I worry about millions. And I'm like, I mean, I'm getting the chills now sharing that. And I got the chills when she told me that. I'm like, that is kind of exactly what I want to tell some of my investors that err on the, you know, low amount, because they're going to save $20 a month on their insurance bill, but yet they have all this extra exposure, because bad things do happen to good people. And so don't think you're immune, even though it hasn't happened in the year you've been an investor or for 50 years you've been an investor. Just because you haven't had a house burned down or major damage doesn't mean it's never going to happen to you.
Right.
Let's hope not, but let's be prepared for it. But when she said that, I just, again, I kind of got speechless for a moment. And if I could like bottle that up and like share it with clients, but of course I'm not going to tell the client who's,
well, you just did. You just shared it with
yeah.
Which is awesome. So if you are the person that said that, and you happen to be listening, just in case, who knows who listens to this, let us know that was you, because we're going to do something special for you, because that is great advice. That sums it up. Rather than me, I talk on and on and on and on, and that was beautiful. And that's my point too, right? That's exactly it. For not only for insurance, but for almost, I mean, a lot of things related to real estate investing. That mantra, or whatever we want to call it, can apply. So, well, let's move on. Let's move on past that. Great information so far. I hope you guys are all paying close attention here, because this is just as important as when we had Mark Canton, our tax friend, on. It's, you know, taxes and insurance and all that stuff. Attorneys, Cynthia Melton, we had on. All those people need to be on your team. So if you don't have an insurance, investor-friendly, knowledgeable insurance teammate, today's your lucky day, because we're handing Nick to you guys today. So let me ask you a question that everybody wants to know. The annual premiums have to be paid for a year up front, or do you pay them monthly? Or, you know, if you're a flipper and you get what I'm saying?
Yes. And I have no say in that. In fact, I prefer just to be paid monthly. It's the lender that requires it. As I mentioned before, some lenders, they want the loan amount covered for the insurance. Others, you know, there's some discretion there. Some lenders, they want the entire year paid up in advance, so they pay it through the loan via escrow and title, and I get a check in the mail, whatever, 3-4 days after closing, and it's the amount paid in full. So we have no preference. In fact, I'd rather do just kind of monthly, as with my clients. But again, the lender kind of pulls the strings on that. That said, with our product, and like a lot of products out there, to my understanding, our product, you get refunded. So it's not, you pay a year. If it sells in 7 months, well, you get 5 months worth of refund. There's other products out there.
Is there a minimum? Is there a minimum of
No,
like 3 months?
no. That's another nice thing about our product is at times someone will call me from auction on a Friday. Let's insure this property. We fire up the insurance. No pun intended there. On Monday, they're calling and saying, hey, Nick, that deal fell through. We need to flat cancel. Perfect. We can flat cancel. They don't owe a dime. I don't know a ton about our competitors because I don't, I don't offer that product. So I learn from my peers or from your peers, my investor clients, and they'll share stories. Well, yeah, they want 6 months, 12 months up front, and it's not refundable, et cetera, et cetera. With us, it's all refundable.
So you
Again,
guys
you
listening,
can,
2 important things to ask your lender. What's your insurance requirement on the amount of insurance in regards to the loan amount, and what's their requirement on insurance? Is it, you have to, so he's just saying, Nick's telling us the lender's determining that. So make sure you guys are asking. It's good to ask. You know why it's good to ask? Because then they know you're paying attention. It also makes it you look like you're smart, even if you're new, if you ask the right questions, right? So
correct. Yeah, exactly. Yeah, and it helps the investors to know how much upfront money they're going to have. If all of a sudden they need to, $2,000-$3,000 down for the insurance, even though they may wrap it in, into the loan payment, still it might be an unexpected expense up front that they weren't necessarily planning on. So yes, getting that information, hopefully the lender kind of manages those expectations, but that's not a given. Kind of have to control your own destiny with all this. So yes, yeah. And also with our policies, you might transition into this soon, is it comes with liability. These vacant home policies come with liability also within the policies, not just coverage on the home. So something may happen to the home, but just as easily, someone may get injured on the premise. I mean, you got tons of people. So we insure it from the day that it's purchased, when it looks like crap, right? Where it needs some severe rehab, to the moment that the new owner takes the keys, where it is pristine and all your blood, sweat, and tears have been put into it as an investor. So we insure it throughout this entire process. That's the beauty of our product with these flip properties, is we insure it from day one to day 200 or whatever it is. And so we insure it throughout that entire time. And so there's a lot of people coming on that property. So again, someone were to get injured, it may fall on the responsibility of the investor. So liabilities part of this as well. We can go as high as $1 million. Typically,
I got a
at least
question for you on that front from another one of our members, or another one of our out there within all our rooms. I think this is a Wari question from somebody in Wari. Somebody said, I was recently applying for a rehab loan, and it required me to carry $1 million personal liability coverage on the property. My insurance agent says the only option I have was to do an umbrella policy. Does that even make any sense?
Yeah, yes and no. That's a lengthy conversation. The word umbrella is misunderstood by 90% of the people out there that are not in the insurance industry. There's a couple things. Number one, if you do a builder's risk policy, again, let's say it's a brand new construction, or it's a major rehab where you're adding a couple, 3 different stories to the property, that builder's risk policy does not come with liability, unlike the scenario I just described where they're flipping the property in kind of cosmetic rehab as opposed to adding, a story or 2. So that product does not come with liability. So yes, you need to find liability from somewhere else, a separate policy. So maybe they threw in that term umbrella, but yes, there are certain insurance products within this industry for investors that does not include liability. So it is important that you find it somewhere.
Because you need both.
Because you do. That they're both probably just as big of an exposure as far as the odds of something happening. Probably equal. Something like that.
When we say both, just to recap, we're talking about a vacant home policy and a liability policy. Is that correct? Or
what I mean
policy?
both is like on a policy, there's coverage for the house itself, meaning vandalism, catches fire, etc. And then the liability component, someone coming on the premise, getting injured, things along that nature. Both are probably, as likely to happen. I guess I have more claims tied to the structure itself.
I was going to ask you that. What types of claims do you see come through from investors?
Yeah. So I wrote down a couple. I figured I'd get that question. It's not unusual to get vandalism claims. It's the prior owner. Sometimes that prior owner, as investors know, they have 20 days to vacate after, the new owner purchases, at least at auction.
Mm-hmm.
And so they have 20 days to vacate unless, the new owner decides to have them there longer. But these are disgruntled prior owners of the house, right? They get a knock on the door from someone that says, hey, your house has been purchased and you got 20 days to get out of here. And if you don't, there may be some legal action. And they already may be 3 drinks into their day. Who knows? You never know when you're catching these people. And so
I think we just bought one of those yesterday.
There you go. Well, good luck. Make sure you have plenty of insurance. But so it's not unheard of for that prior owner to vandalize the place. So we've paid claims where they've taken a sledgehammer to the walls and things of that nature. So that's not a very, very pleasant scenario, but again, that's covered within our policies. Number one. Number two, we certainly had over the 15 years, we haven't had a ton of total fire losses, but we've had 3, 4, 5 of them. But a lot of vandalism, vandalism claims.
What about
the most interesting
appliances?
Yeah, theft. That's the most common, and we actually our theft coverage for vacant home is very limited. It's a couple thousand. So at times, if they just steal carpet that's laying around or things that's laying around, that's not covered. But if it's been installed like cabinets or countertops and they rip them out of the wall, that's actually covered under vandalism. But yeah, theft, sometimes they'll have their personal tools there and, things like that. And it may even be below.
These investors who are going to be doing deal after deal, and is it worth them making a claim? Or since they're buying each one of these properties, ideally, if they're listening to, legal podcasts about legal topics, they're buying these properties in different LLCs. So meaning, like if you're a regular homeowner at my own house, I am like the last person on the planet that's going to make an insurance claim on my own stuff unless I absolutely need to, because I don't want my rates to go up. But as an investor, you're buying one-off single asset entity type deals. Does it attach to the investor name behind the LLC as far as watching their claim statuses pile up? Or since they're all different LLCs for each deal, most of the time probably, is it one and done type of review?
Yeah. If I understand your question correctly, it'd be one and done. It's just tied to the entity that particular claim was under.
So if you have 10 projects going at once and they're all in different LLCs and you make a claim on 2 of them, next time you're buying however many properties you buy per month or whatever per year, no effect, because
correct, unless you insure it under that same LLC again. Yeah.
Right.
And you're right, Julia. It's important to have that conversation with client. If it's $1,000 deductible and it's someone kicked in the door and stole some tools or something, and it's $2,000, $3,000 potential claim, is that even worth it? Number one, to take your valuable time and work with the claims adjuster and provide the documentation they need, et cetera. Is it even worth your time to
time versus
file
money?
that? Yes, and then moving forward, how's that claim going to impact your record? But I did want to share real quickly is you asked about interesting claims. This one wasn't too long ago. It was about a year ago, and it was a vacant house, and one of their contractors, one of their workers there, was bringing in, I think it was a microwave, and it was in a box, and he set it on the stove. Well, while he was propping the box up on the stove, the box kind of hit the knob that turned on one of the burners. And, they set that box, the microwave that's in the box on top of the stove, and I'm sure they left for the day. So you can imagine what happened there.
Wow.
There's many different ways that a place can catch on fire.
Do you ever see contractors get hurt on sites and then claim through the owner?
Sure. Yeah. Again, that it's like, where does our client's insurance kick in versus L&I versus,
Right.
Other things out there.
Right.
But yes.
Yeah.
Yeah.
Make sure you're using.
Yeah. And the key thing there is, just because they pound a nail into their own hand, is that truly something our client is legally responsible for? I just have the questions. I'm not the a legal entity that determines this, or a judge in a courtroom, but it's got to be something that the investor created a hazard. They were responsible for those loose steps on the deck that they never told their contractor about. Then all of a sudden the contractor walks down those loose steps and takes a major fall. Well, that falls on the investor more than likely. But again, if a contractor is stapling their own hand to the subflooring, or pounding in a nail into their own hand, some of that, they need to take responsibility for. But
that's
anyone can file a claim.
With pepper spray and stuff like that. They say, I'm an agent. I'm a nice young lady walking into these crazy houses sometimes, and people are like, do you carry pepper spray? And I'm like, no, I don't carry it, because I'm just going to spray myself in the face. I mean, I'm more afraid of spraying myself in the face. Joe, that's you on the trail, right? With the bear spray. You probably spray yourself.
Yeah, they put a lock on those things for a reason, so you can't just spray them everywhere, because it happens.
Well, yeah, it's not only child-proof, it's adult-proof, and when you need it, you don't know how to work it probably.
Right.
So
Totally.
Yeah.
That's right.
Yeah.
How about extra? Do you have extra coverages? Do investors, flippers, developers, landlords, are there any add-on coverages that they should request?
So again, getting back to, the vast majority of what I do is the flippers, just investors going in there, doing the cosmetic work on the homes and reselling them. Is vandalism is an optional coverage on our product. I don't even tell the client that. I just add it. It's fairly affordable to do so. And as I mentioned a few moments ago, vandalism is the most common type of claim. So again, it's optional. If you're not working with a good agent that knows their stuff in this industry, they may not even realize that it's optional, or they need to take the extra 5 seconds while they're, running the application to add that coverage.
Yeah.
Absolutely. So yes, vandalism is something that's critically important to as an add-on, and it's very affordable to do so.
What about if somebody's gonna even allow a rent back for a little bit? I know that on some auction purchases and stuff like that, they're in there before they get evicted. But sometimes, as investors, I mean, actually, one of the good terms I pull out is I let people stay for a little while afterwards. They gives me an edge, and it costs money, right? But you just underwrite it all in there, and that sets me apart. Sometimes, just did it yesterday. Boom, on a got one done. And is there any coverages that anybody needs to know about when you let somebody stay in for 60 days or something?
Yeah. Good question. And I wish I had a brief answer for that, because that can get really sticky. There's a couple underwriting components when it comes to the insurance industry on those types of scenarios. Number one is the house on the outside. Insurance companies don't necessarily care too much about the inside. They mainly inspect the outside. If the house on the outside is in good condition, number one, and number two, you have something in writing with this tenant, then yes, the traditional landlord rental type policy is probably most appropriate for that 2-3 month time frame. Different story if the outside is deplorable and they're going to, the 20 days is turning into 30 days, 40 days, 60 days. What is the most appropriate product for that? It's truly a case by case basis, but it's just important to update your insurance professional kind of every step of the way, what's truly going on there, and collaborate with them to make the best possible decision. But yeah, you can't, these are such unique situations that 90% of the people in my industry have no idea, that these things even occur. And same with 90% of society out there that just, live in their owner occupied home and they don't do this investor stuff. It's just so unique and different. And sometimes they're just not a round peg for the square hole sort of thing. It just, but you got to do your best.
As investors, we assess risk. So risk is always going to be there. You just have to get all the information, and then you have a fully informed business decision based on your risk tolerance to make, right? So basically the message here, guys, is that you just need to know like the thresholds. Literally, you need to just go to confession to your insurance agent. You need to tell them exactly what you're up to, exactly what you're buying. And, you think like, oh, I don't want to tell them because my insurance costs will go up. But yet that's so short-sighted. Why don't you just underwrite your deal correctly to afford the coverage you need to protect yourself? Rather than think, I don't want to tell them because I don't want to pay an extra $1,000 or $2,000. Why don't you just make sure you underwrite correctly and learn what the costs are for the situations that most people do the same type of deals over and over again, right? I find, so go get, Nick on your team or somebody like Nick. Nick sounds like a good choice to me. And, tell them what you're up to every time and get the right coverage, and tell him before you even write your offer maybe, and let him price it out so you underwrite it correctly when you're doing your deal analyzer. If you guys want to drill down and get all ninja about it, you got to have Nick on dial. And then the number ahead of time, and then you're not going to screw that up when you make your offer, or you can decide, how that fits in or whether you don't care. And it's just good information. I know you guys are all information junkies out there. So that's what we're trying to figure out here today. So we got vandalism as an add-on. Anything else?
No, I think the last component that we haven't touched on yet is just make sure it's insured correctly based on the ownership entity. That's something else. Is if this is owned under an LLC, well, the insurance needs to reflect that LLC. If it's owned under your personal name, John Smith, well, John Smith needs to be on there. Sometimes I'll have clients, it's owned under John Smith, but well, let's put the insurance under Make Money LLC. No, it's not really a choice. It's not, you just can't randomly. There's some strategy to this because the insurance company may, trust me, insurance companies aren't out there looking to deny claims. Okay? They wouldn't be in business if all they did was deny claims. And I know that's kind of a, with some people that's a thought out there. We're not looking to do that, but for your own protection that's critically important, is to make sure it's insured under the ownership entity that it's under. So again, if it's in LLCs are a common one that, especially with rentals where it may be insured under an LLC or owned under an LLC, but they have it insured under their personal name. Well, when the claims adjuster does their due diligence and they're going to the county record or whatever it may be and see it, that it's owned under an LLC, but we have the insured as John Smith. Well, we're insuring John Smith. We're not insuring anything for the LLC. It just, I'm not
Messy.
telling you the
Takes
claim will
time
be
and it's
denied or
messy.
not, but it's best to err on the side of caution with all that.
Right, and it wastes time, and it takes longer. It causes delays. You have to work on stuff, all that stuff.
Mm-hmm.
Is there any type of, I have 3 things left I want to ask you. One of them, another member question. How can you, and when I say member, guys, I'm collectively talking about our local members in any club or whatever you're at, because we love you all and we all love to hang together. So that's what I love about Seattle. You probably don't know that, Nick, but there's lots of meetup groups and everything, and everybody helps everybody. Everybody joins everything. It's wonderful, and I just love being a part of it because people are so cool over here in the Seattle area and the Pacific Northwest in general.
Yeah, you're just not competitors. I mean, you're truly partners in this whole thing.
Love you guys.
Yeah.
Okay, so question is from somebody is, how can you get a better rate on your vacant investment property or a newly built home after builder's risk insurance stops because of final inspection? Meaning, I guess, once it's done and it's under construction and it's not under construction anymore, does the builder's risk policy terminate and you need to convert to a different policy while
Correct.
It's for sale?
Yeah.
Ooh, good question.
Yeah. For sale, yes. To my understanding, again, with those builder's risk policies, is yes. To my understanding, you have a builder's risk policy and it's under construction.
Terminate
You're building
a
new home. Yes. Yeah. Once you have it on the market all pretty and staged and you got people, walking on there, to my understanding, that's where that builder's risk policy terminates or is supposed to terminate, coverage terminates, and you need to make sure you have the correct type of policy in force. And again, it goes back to that vacant home insurance, which we offer through Foremost. So yeah, that's critically important. Or another example, Julie, it's not uncommon for my client to buy one of these rehab properties, short sale at auction, what have you, and they fix it up. And then 4 months later, they decide to keep it as a long-term rental. Again, we kind of cut the cord with that vacant home policy and transition over to the landlord policy. So it's critically important to make sure it's insured the way it's being occupied or used. So,
and again, when they convert over to the vacant home policy after new construction, after the building is done, for farmers at least, that would be a vacant home policy at that point, I assume.
Correct.
And that would be that 1% of improvements costs, maybe about.
A little more expensive. Conversely, if you have the vacant home product, because you buy a home, you're fixing it up, and then 4 months later you're going to rent it out, and then you transition to that landlord, rental type of policy, that cost is quite a bit less.
Right.
So again, regardless if the cost is more or less, it's just critically important that you have it insured correctly. And every time there's kind of a transition in that process, it may constitute, the need to switch out the product.
Is a vacant new construction home, you would think, policy is probably more expensive than maybe not, a purchase plus rehab costs calculation. Again, it's just a number and it's prorated.
Yeah.
And you guys just need to know that it exists and that you need to do it and you need to deal with it, right? Or make your business decision to roll the dice and take a risk. I'm not one of those.
As I tell investors, if I quote them for, the high risk vacant home, under rehab, and it's whatever, $300 a month. Whoa, $300 a month. I pay $100 for the house I live in per month. And, why is it so expensive? Well, I don't mean to throw everything at the feet of the lenders, but your lender is not charging you 4% interest on your loan either. I mean, you tell me, Julie. I'm not, but I think it's close to double digits, is it not? I don't know, but I know It's not 4%. Well, why are they not charging you 4%? Well, it's the uniqueness of this type of transaction and this type of property and everything else. Same thing's applicable to the insurance. It's more high risk. And so the cost is more, probably for the same reason why your loan is not 4% interest rate.
And let's just say, guys, probably like whatever kind of policy that you can find that is cheaper out there, because some of you listening are going to be like, give me that cheap stuff. Well, you get what you pay for, right? So just remember that if you're getting something cheap, you're probably shortchanged on the coverage somewhere in there, right?
Right.
Possibly. So don't just look at how much does it cost, especially with insurance. You got to look at, well, what does it cover? And that's up to you guys to make, that cost versus risk analysis for yourselves. Everybody's going to be different, but let me see. The burning question and the last question. Well, actually I have two left. Sorry, I lied. Is there any type of portfolio coverage do you offer like landlords or let's say developers that have a bunch of projects going or flippers that have 20 going at a time? Do you have any type of portfolio or broad coverage or any?
Good question. Yeah, there's products, some of which we have, some of which we do not, where you can kind of piggyback all the properties onto one policy where it's maybe a little bit more seamless for the client, for the investor, where it minimizes paperwork and number of bills they get, et cetera. The challenge, those are more conducive to cash deals. Now, I've got some investors, it's always cash deals, and others they're using the hard money. When a lender is involved, that gets really complicated. Typically, those need to be separate policies when a lender is tied to.
So that means private money too, right? That's a lender, whether it's hard money or private
money.
Yeah.
Right. Yeah. You know that lingo better than I, but yes, someone else that has an interest in it, because they'll want to see, when they issue the policy, they'll want to see at least 6-12 months worth of coverage. And well, if we're piggybacking onto a policy that is about to expire come November 1, well, currently we only have about 6 weeks of coverage left on it. Just administratively, I'll just kind of keep it short there instead of getting deep into the weeds. But yeah, if a lender is involved, tied to a lot of these properties, then it can be very, very complicated to have them all tied to one policy like that.
What if it's the same lender, though? What if they do all their business with Veristone and they use Veristone over and over and over and over again? Does it make it simpler then?
Perhaps.
So,
again, it just kind of depends on, and then, it's hard. Like if you got 10 properties tied to one policy, it's very difficult to create a billing for one property because all 10 are tied to one policy, one billing,
right,
et cetera. So just administratively, now doing it like that, sure, I don't know. It might save the
time is money,
a few
guys.
bucks. Yeah.
Right.
Yes.
Okay.
Yes.
Okay. Now this is officially the last question, which is a burning topic out in investor land these days, which is the short-term rentals, the Airbnb. What do you do? What do you have what type of insurance should investors get for their Airbnb properties, which are essentially rental properties, right? But it's short-term.
Yeah. That's
coverage.
More and more common. We do have that product. I'll be candid with you. I have not written one of those. I haven't had a client with that need, even though, to your point, Julie, this is kind of the hot thing these days. So we do have a product for that. Again, it's not something that I've had a need to issue out for a client. But again, it's just important to share that information with your insurance company, with your insurance agent, is to be very transparent with how this property is being used. Is it a full-time tenant that's there every day of the year and you got a lease in place, or is it a Airbnb type situation? Again, it's just important to make sure it's insured correctly.
I think somebody on our thread here, or a Huawei thread here, said that that maybe commercial coverage is what it is really for the short-term rentals. Maybe there's some, you guys may have a product, you might want to, then there's also maybe some commercial. How does that work though? If somebody's covering you, I guess if you are doing a short, it's not like you're having one insurance company cover your short-term rental business and another insurance company cover your, general, I guess they'd cover all or nothing, right? And they just have an add-on for short-term rental.
They could. Yeah. Assuming that same company
has. Farmers be the underlying coverage and they would plug in some sort of commercial coverage layer on top. Does that make sense? Maybe that's not possible.
Yeah, it's not necessary. They're kind of, it'd be a separate, unique policy for an Airbnb property. So it's nothing that we'd be adding on to an existing policy or piggyback onto. But yeah, you still may be able to use the same company, same agent, because an agent that can...
I wonder with the lenders, because right, we're trying to blame the lenders for problems today. Sorry, you guys. Wah, wah, ha ha, hee ha. I wonder, just thinking out loud, because we don't really, since nobody else is really in front of my face, I feel like we're just talking to each other here all the time. But on the Airbnb stuff and the short-term rental stuff, I think a lot of people might, maybe they buy just a regular old rental property and then decide after they've owned it, hey, I'm going to do short-term rentals. And let's say they have a loan on it. They probably never inform their lender that they're doing that.
Oh, sure.
And then the lender, more than the insurance guy, might have something to say about that. I don't know, guys, because I'm not an Airbnb expert. There's a lot of you out there who are enjoying that game. So if you have any information on that, like in regards to notifying your lender, I guess I'm just thinking out loud because that's what I do. So let's say you put a short-term rental policy on your property because you're going to do Airbnb. Doesn't that information automatically get sent to your lender? Because don't you need to name your lender on your policies?
Right.
So then your lender would be notified of you put a short.
Well, in theory, who knows how small a print or fine print that component of the insurance document, reads on what the lender is receiving. Maybe they're just looking for effective dates, coverage amount, property address, and owner name, and they just kind of tunnel vision just on those items.
I guess we don't know.
And to my understanding,
let us know.
Yeah, to my understanding, interest rates are higher on a long-term rental as compared to owner-occupied, if I'm not mistaken. So if someone suddenly moves into one of their rentals, and all of a sudden that's owner-occupied, yes, you need to inform your insurance agent, but I never thought about informing your lender. I don't think that.
Well, I don't think anybody would do it. I'm just saying nobody's going to call their lender and tell them. But isn't your lender get notified? I mean, we're kind of switching gears on you. This maybe isn't your question, but doesn't your lender get notified if there's a change in your insurance? That's like they get.
Yes.
That's all I'm saying. Is you've had a rental for years and all of a sudden you're like, I'm going to do Airbnb. So you go get an Airbnb short-term rental policy from whoever. Then your lender gets notified that you put a short-term rental policy on there, and maybe they care, maybe they don't. Probably not, because if you're paying your mortgage. But anyways, just something to think about. I don't know. I just thought of it while And all you smart people out there that like to research and investigate, maybe you can drop a note to us at the bottom of this podcast and tell us if you have any insight into that. Joe, how do they do that?
Yeah, they can get to the bottom of the podcast and the comment section by going to seattleinvestorsclub.com/50. We're at the big 50.
Ooh, my God, Nick. This is a moment, Nick. The big 50 with you today. Congratulations.
Well, cool.
I feel like
I'm honored.
Fireworks going off or something like that. Joe, you got any any poppers or anything over there where you're at? Buddy, come over here and start. I'm going to get Buddy to come over here and start barking. That'll be your Buddy, get over here.
Don't they call them drops in the radio business?
That's right. A little mic drop.
Like when they they drop in a sound of a firework. I was thinking, Joe could do, but
Yeah.
I think they're called drops. Are they not? I don't know.
Yeah, Joe, you need to school up. You got to be ready like we're on a radio. You got to be able to, have what's that one radio station where they crack a joke and they go, it's like a turtle humping a shoe. And then the guy pushes the button and it goes, eat, 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 eat.
Right. Yeah.
We got to let's do that, Joe. Let's get some sound effects going.
Joe needs more buttons at his disposal.
I do. Right. I need a soundboard here or something like that.
Yeah. That would be awesome.
Yeah.
Goal. Yeah. 2019 goal for the podcast, Joe, right there. A soundboard.
There you go.
There we go. Let's do it.
Well, Nick, awesome. There's Buddy. See? All I had to do is say your name.
A little bit late, buddy.
He knows.
Yeah.
He knows. Number 50. Number 50. How can everybody get a hold of you? Because you're so awesome and you're gonna be on their team and be on their side and save them from hurting themselves, or at least give them all the info they need to underwrite their deals and be a success.
Well, I appreciate you asking, Julie. And today we spoke a lot about in general, insurance, but each person's situation may be different. So I'd be happy to talk with them about their specific situation, and I'm happy to provide advice on what their current plan is. It's just a second, third opinion on, a lot of, at times I may say, hey, what you got going is great. So keep it going. You don't need to transition your business to me. So I'm just happy to give advice as well. So I just think just good old phone call or email works for me. The phone number here is 425-458-3061. Again, 425-458-3061. That's my Bellevue office direct line, and email. My last name is Sooy, Sooy. So my email address is nsooy. So N is in Nick, S is in Sam, OOY, nsooy @farmers. That's plural at farmersagent.com. So either of those work great.
Awesome. Well, we'd love to have you come out to a Seattle Investors Club meeting. Joe will hit you up with an invite if you ever feel like joining the crowd on a Saturday evening. We meet the second Saturday of every month in Renton at the Renton College.
So that's how you investors get ahead while everyone's out partying or something, doing something not good on a Saturday evening. You guys
we are hustlers.
We are hitting the pavement. Yeah, good for you.
That's right. I keep a flask under, in my back pocket.
Oh, okay. So you combine the two. Okay, I got you.
We're amongst friends, right? But,
yeah,
come join us. I think you'll probably know some people there. I think some of our friends at Veristone that we love and join us and are our preferred hard money lender at Seattle Investors Club. Shout out to Travis Wandell at Veristone for hooking us up with Nick here. It's been a pleasure, and he's funny, and so we like him.
Oh, good. Well, thank you. It took you an hour to share that you liked me, but
well, I like to see it for the end.
Yeah, we got to earn it. Yeah, well, I appreciate that.
That's right. That's right. Well, once again, awesome, Joe. Lay us all the details again once more time on how people can give us a review and comment and find us and all that jazz.
Yeah, absolutely. You can get to the show notes for everything that we've talked about today by going to seattleinvestorsclub.com/50. That's seattleinvestorsclub.com/50. And as you guys know, if you've listened to this podcast before, we love reviews on iTunes, and we've had quite a few lately, actually. So high five, Julie. And you can get straight to the iTunes interface where you can give us a review by going to seattleinvestorsclub.com/iTunes. And for every 5-star review we get, it totally helps us out, guys. I know that you probably don't believe it, but it totally does. So we would appreciate it if you would do that for us. And that is all I have for right now. You have anything else, Julie?
I got nothing. I'm good to go. I'm going to go on and crank out some of our appointments today, Joe, because phones are ringing off the hook. It's good stuff right now. The market has changed, everybody. So get your mail out the door because you're going to get some calls. Don't be shy. Go for it.
Heck yeah. Well, Nick, thank you so much. I appreciate it. And y'all have a good day.
Over and out.
Thank you.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.